Let's now take a look at problem 4-4. This is a relatively easy problem in which we've been asked to prepare an income statement using the multi-step format and then do the same thing using a single-step format and a statement of retained earnings. So to kind of take an overall approach as to how we would handle this problem, we start out with the multi-step income statement and look at what needs to be prepared over here, the format first, before we look into the items that are listed over here. So in the multi-step income statement, as with the single-step income statement, we have the name of the company, name of the statement, and the period that it relates to. The first portion is always sales revenue minus sales discount minus sales return and allowance. That will give us the net sales. Now, if we have not been given these two items, then the sales revenue is the net sales. You will then subtract cost of goods sold to arrive at the gross profit. This format is always standard in terms of how we start out. After that, you're going to identify your other expenses. Those expenses are typically grouped into two categories. You have your selling expenses and your administrative expenses. Doesn't really matter what order you list them in, as long as you list these items over here. So selling expense and administrative expenses will be listed. After we are done with listing those items, we will have income from operations. Okay, so let's start out with looking at the problem and seeing what information is given and if we can immediately plug it into this format. Sales revenue is given to us, so I have my information over here. And here I'm using an inside column and outside column just because it's easier for me to visually see it and explain it to you. The next item we have is sales discount. I'm going to write less sales discount, so I'm putting the number in parentheses. And as you do this problem, if you have your textbook is a hard copy or on an exam, you can check mark these items to indicate you've taken care of these. The third item is cost of goods sold, and I'm going to put that number over here. The cost of goods sold, again, it's in parentheses. Now we've been given numerous expenses. If we can identify them as selling expense, we put them in this category. Otherwise, we'll put them in administrative expenses. So salaries and wages expense, we have this number over here. So since they tell us it's for sales, the same thing for commission, sales commission, travel expense for salespeople, delivery expense, entertainment expense, telephone and internet expense, depreciation expense, repairs and maintenance, all of these, and miscellaneous selling expenses. All of these have been identified as selling expenses. We don't need to do that. They've told us that, so I'm going to identify all of those over here or group them over here. And I've gone ahead and added the next item that is also selling expense, which is your bad debt expense. Okay, so I put those over here. Then we have depreciation expense, which is for the office furniture. So that item is going to be listed over here. Okay, we're going to put, I want to highlight these over here. Telephone and internet expense for administrative. Depreciation expense, property tax expense, that's always grouped with administrative expenses. Bad debt expense, as I mentioned, is a selling expense. It relates to sales that you made. Repairs and maintenance, again, the administrative, they've told us over there what it is. Sales return and allowance, we do have this number. So I go back over here and plug the number in over here for sales return and allowance. Okay. Then we have dividends received. Dividends received is dividend revenue. So that will come over here. Dividends received will be other dividends, other revenues. Okay. Interest expense, that's always listed with your other expenses. Income tax expense, that has to be listed as a separate line item. So I'm going to put that separately. Depreciation understated due to an error made in 2014. This number is going to be an adjustment to retained earnings. It has nothing to do with the income statement. So for now, I'm going to skip that. Dividends declared on preferred stock, that goes in retained earnings statement, as does the dividends declared on common stock. That goes into the retained earnings. Okay, so these last three items, mark these, so these go into retained earnings, and we'll come back and address these. Okay, so I have the information necessary over here to calculate my net sales number, which is sales revenue minus my discount minus my returns and allowance. That gives me 1,485,050. I subtract my cost of goods sold, and that'll give me my gross profit. All these expenses that I had identified as either selling or administrative, and they were given to me. The only one that I had to identify was property tax expense, and that's always an administrative expense. Okay, I'll put those numbers in place over here. Okay, the subtotal I calculate, I'm just going to highlight that for a second over here, is income from operations. So it's your gross profit minus your selling and general administrative expenses gives you your income from operations. To that number, you add any other revenues and gains and subtract any other expenses and losses. We have each of those, and that will give you your income before taxes. On this number, you'll have to calculate your income tax expense, but in this case, we were already given the number. We didn't have to calculate it. So I have my income, my net income number at 221,575. Earnings per share is calculated as net income minus preferred dividends divided by shares outstanding, which is 80,000 shares. Okay, so net income minus your preferred dividends of 9,000 divided by 80,000 shares, and that number was given to me over here. Let's go down and see how we are going to do the statement of retained earnings. Statement of retained earnings, we always start out with retained earnings beginning balance. That number was given to me, and the problem at 337,000. If you recall, we had said this depreciation understatement due to a prior error, we had to make an adjustment, and that'll be the first thing you do. You make an adjustment for understatement of retained earnings, you subtract that amount. It always has to be net of taxes. The amount given to you was already net of taxes. You didn't have to calculate the net of tax number. This gives you the retained earnings number, which is adjusted. Now to this number, you will add your net income number that you get from this previous statement. You add the net income, and you can calculate a subtotal. Not required, but you can calculate a subtotal. This money is now available to pay out as dividends. The company did pay out preferred and common shareholders their dividends. You have to list them individually. We don't combine these dividends. We do write on the face of the statement of retained earnings these numbers separately. Leaving me with retained earnings at the end of June, I have 494,875 as the final number. Okay. Now, the same information, if it has to be presented in the single step format, let's see how it's going to look different. So the difference is going to be in the income statement. There's absolutely no difference in the statement of retained earnings. So it's going to be identical to what we had over here. There is no difference. So the formatting is only for the income statement. Also, the earnings per share number you're going to come up with is going to be exactly the same. It's not going to be different. So what do we have that's different? What we have over here is, instead of going through all these subtotals and calculations, we're not going to do any of that. What we're going to do is, we're going to list all our revenues, we're going to list all our expenses, and make this whole thing a lot easier. So, for revenues, we list only the net sales number. We don't go through this detail. So my net sales number, and I can just copy it from here and bring that number over here. The next is, do I have any other revenue? And the answer is yes. If you recall, I had this revenue, dividend revenue. I put that right up over here. Add the two numbers, and that gives me my total revenues. My expenses, what am I going to list? I'm going to list cost of goods sold. I'm going to list my total administrative expenses, total selling expenses. So let's go down the list. I have cost of goods sold, administrative expenses, selling expenses. I'm going to list each one of these expenses over here. I will also list the interest expense. That gets listed over here. Okay. So I have my total expenses. And the subtotal is the income before taxes. So I've listed everything that we had up over here. And then I'm going to come down to my income before taxes. So the next thing that's left is my income tax expense and the net income number. Obviously, these numbers are the same as before that you had over there. Okay. So once again, net sales, I need just the final number. If there are any other revenues, I'll list those over here. The expenses, I'll list the big items, the cost of goods sold, the total administrative expenses, the total selling expenses, and I will list the interest expense, if any. To arrive at income before taxes, I subtract the income tax expense and come up with the net income number. No change in earnings per share. It'll be exactly the same thing. And as I already mentioned, your statement of retained earnings is also going to be exactly the same. No change over there.